Yeah. Today at Deal Disruptors, we're chatting with Jeff Erickson. How are you?
Doing wonderful.
Now, I've heard through the grapevine you're an incredible guitarist.
I would not say incredible guitarist. I would say a garage band guitarist.
Talk me through your career in that. Because I know we're going to be talking about venture capital, angel investing, but I just saw on your LinkedIn and I was like, I'm so curious to ask you.
So the Electric Ski Poles was a high school band, and basically we recorded stuff out of our garage. And all the songs were about skiing, which was our passion. And we cut an album, and it was probably about 4 or 5 years ago that we all got back together and we re-recorded, and we released an old album on iTunes and Spotify. But it was kind of fun because it was actually during COVID, we ended up doing a live concert, and it was streamed, and we had a bunch of folks there, but we kind of had our little reunion, which was kind of fun.
That's cool. What a cool era.
Yes. Yeah, it was kind of fun.
And so take us back to, why did you want to get started in the whole entrepreneurial world?
I think I was always kind of entrepreneurial. Even as a young kid, it was always I always liked to sell stuff or do things like that. In fact, while I was working when I came out of graduate school, just always had kind of a side gig going. I remember one year we started selling car flags that would fit on the top of your car for your sports teams. And we became like a pretty good sized distributor for all these car flags. And it was the year that the Utah Jazz went to the finals. And my wife and I were out there selling car flags at all these stands, and there was just a huge demand. It was actually really fun. But yeah, so I've always had kind of a side gig, it seems like. And then as I went through, after I got out of my graduate school program, I ended up working for a finance company. And after about 4 years, one of the principals there, the partners, he left to go to a little startup, and he took me with him. And so I was at this little startup, probably employee number 15.
Wow.
And just loved it.
How old were you?
I was probably 23, probably 24, 25 at the time. So, yeah.
And kind of how did you're very well known in Salt Lake City as kind of like the mayor of Silicon Slopes. Over the years, how have you built that community, and what is it like back then to now?
Yeah, honestly, it's really been over the past decade or so.
Mm-hmm.
Before that, I was running a company that my wife and I started.
Was it furniture?
And yes, it was like a home decor company, and so I was kind of heads down, really out of the tech Silicon Slope scene. Definitely had it on the periphery of, kind of knew what was going on. But for the most part, it was heads down running this company, and we ended up selling it. They made me stay on for a few years as the CEO, and it was really after that where I started angel investing, started really getting into more of the Silicon Slopes scene at that point. So yeah, it hasn't been super long, but it's been amazing to see the change that has happened in Utah, Silicon Slopes area.
What was your first check that you wrote into?
Oh man, actually, first check was probably in a little company out of Utah that my wife and I wanted to support, and it was called VidAngel.
Okay.
And we decided to invest because we liked the mission of the company, and so we wrote a check, and then it was kind of a check to actually help them get through a lawsuit against the big studios, and we figured that it was kind of a donation more than investment. But it ended up the way that all played out, it's now called Angel Studios, and they went through this whole process of settling a big lawsuit, transitioning. The way they treated their shareholders was really amazing. And we still hold shares of that company today. So that was probably our first, angel check.
Incredible. And for someone who maybe wants to write their first check, what is kind of like your philosophy?
Oh man, I would actually get involved if I did it over again. I would get involved with like an angel group or be part of something like that, because I made a lot of mistakes. I mean, my first few checks, I shouldn't have written them. And
what was kind of like, looking back now, what was kind of those red flags that you didn't realize?
Inexperienced founder. Loved the founders. In every case, it was like, fell in love with the founder. They're like, oh, these guys, they're gonna change the world. Drank the Kool-Aid with them, and I think after you go through that a few times, and you start to pick up on patterns. And one of the patterns you do see, if somebody has been through the process before, there's a level of experience that really shows through. There's a reason that second-time founders, third-time founders have an advantage, and they do, and investors recognize it.
Very true. And what would you say, like, how did Founders and Funders come about?
Yeah, that was an interesting story. After I took that little break after we sold our company, I wanted to get back into the tech scene. Yeah. And I came across a little company. I reached out actually on LinkedIn to some folks at eShares, and they ended up coming out to Salt Lake, and they were kind of evaluating if they wanted to set up an office here or Denver or Austin. I got to know some of the folks there, and they decided to come to Salt Lake. And so, I jumped on with eShares early on, and they rebranded to Carta. And so I spent almost 5 years at Carta, and that was amazing, because that put me right in the middle of the startup ecosystem.
Yeah, Carta's incredible.
Yeah, and it was crazy. Those early days were super fun at Carta. And I think that one of the things that happened is we have the big Silicon Slope Summit event here in Utah, and I wanted Carta to sponsor Silicon Slopes, right?
Yeah.
And they didn't have a budget, especially, this is an event in Utah. It's not even in San Francisco. It's like, no, we're not going to, pay for that. And so I got a bunch of folks together, and we kind of created our own little event. And that was something that we had started to do a little bit, but we'd never done anything of that scale.
Right.
But it was really kind of, it started out as kind of lead gen for Carta or anything. So it was a way to do some events, bring people together, kind of get to be part of the community, and it kind of evolved from there pretty rapidly.
That's incredible. And so when is your next event for Founders and Funders?
Oh, actually next week.
Oh, that's right.
Yes, on the 20th. We have a number of people that have gone through accelerators. They're going to share their experiences, and should be really cool.
For anyone listening that hasn't heard of Founders and Funders, kind of walk us through the mission.
Yeah, I think the mission really centers around the founders. Being a founder is really lonely. And
amen.
Yeah, I've experienced it. My son has experienced it. He's in a good spot right now, but it's lonely.
Yeah.
And the only people that really get you are other founders, because they're going through it too.
Yeah.
So the connections with other founders, that's one of the powerful things about accelerators, is that network. And you're like, oh my gosh, these guys are going through the same thing I am.
Yeah.
There's a real bond that's created there, and founders like to help each other.
Yeah.
So if we can get the founders together, what you see is that they will naturally kind of help each other out, especially if you can find a founder that's kind of a step ahead of you. Yeah. So if you're going to be raising a series or a seed round, talk to somebody who's raising their A round, and they've been through what you've been through. They can coach you through a lot of these things, make introductions, they know who to talk to, and they can share how, what they did and the mistakes they made. So those founder connections become really powerful. But the other side of it is the investors.
Yep.
And the investors founders always want to meet investors. And, one of the things that you find, it's kind of a misconception, especially first-time founders, is they kind of think, okay, a fund just raised $100 million. They've got money. I need money. They should write me a check.
Right.
Without doing any research, it's like, you're not, you don't know if you're a good fit for that company or not, for that VC.
It's like a little bit of entitlement.
Yes.
Yeah.
So it's like, but if you can get them together, founders start to realize pretty quickly that, oh, there's a reason that I shouldn't talk to that VC because they can't invest in me. All I have to do is figure out their thesis, right?
Exactly.
And so if you can educate on that, then founders start to realize that, okay, I have to actually do my research to see if I'm a good fit for a founder or for a funder.
Yeah.
So, that's another benefit that I think you start to see. And then I think on the investor side, having a casual, fun atmosphere, a way to get to know founders outside of them pitching you,
makes important.
Yeah. So like these ski with a VC events we do, I mean, what better way to have a casual conversation on the chairlift where, you don't have to pitch anybody.
Exactly. I do. I really resonate with that. And I think it's such a cool, I don't know, just like ecosystem that you've built, but on something that everyone loves to do. Like we all love to get outdoors. We all want to, go and hang with your buddies in the snow. But and it's right. It's like making sure that you're, as a founder, you're doing things with integrity and you're knowing who you're speaking to and you're not just soliciting investors just because you're trying to, you're kind of scrambling. It's like slow down and be intentional.
100%. Yes. Yeah. And that's how relationships form as well.
Yeah.
And I think if you start that way as a founder, building relationships, whether it's with other founders or potential investors, people want to be helpful to people that they, like to be around. And so even if you get to know an investor at a ski event or at another type of event, they might not be the right fit for you, and that's okay, but they get to know you as a person, not as a founder that's pitching them for something. And they're much more likely to want to help you out or go, oh, who you ought to talk to is our buddies over at this firm.
And I also think like service providers within the ecosystem and within the investment ecosystems are great warm introductions. You make these relationships, you send a few referrals, it's going to all come back. It's like we got to start getting into that mindset of like, let's give first and then the universe will provide.
Yes. Yeah, the whole give first.
Yeah.
I love that.
Yeah.
You mentioned the service providers. So that's kind of the other part of the ecosystem.
Yeah.
It's an important part of the ecosystem. And the other challenge that a lot of founders have is they don't know, what they should be using or what they could be using to help them do their job better.
Yeah.
And there are a lot of tools out there, and it's just knowing what to use. So you can ask other founders, it's like, hey, what do you use for this? We're doing lead gen or we're doing whatever it is. And other founders can kind of guide you, but meeting the service providers, whether it's a startup attorney, it's, somebody that will help you with your bookkeeping or your financial modeling or your cap table, whatever it is. Those are things that founders need and they don't always know where to go to.
Yeah.
And so the service providers can kind of be there to kind of educate. It's not necessarily to sell, it's to educate. And if there's a good fit, fantastic.
And then that opens up a whole new world of an ecosystem where now, let's just mention Carter, for example. Like you're now a part of a group where you can now meet the founders of Carter. Like it opens up like who you're using as service providers. You really want to make sure that you are, whether it's a little bit more expensive, it opens up a network for you as well.
Oh, yeah. I mean, you do business with people you like, know, and trust.
Correct.
And so if you can start to get to know whether it's a service provider or, investor, other founders, you start to build those relationships. One other thing that we've seen that we didn't really expect coming out of Founders and Funders are some of the synergies that happen between the service providers.
Ooh.
And that's been really fascinating because some of the best relationships that I've seen come out of everything is between some of these service providers where they have discovered synergies or potential partnership opportunities. That's been really fascinating to see. So it just kind of all works together really nicely.
Yeah, so true. And going back to your career, where felt like a turning point for you?
Honestly, when we sold our company, when I got out of that whole mess of being the CEO for 3 years,
How was that?
that was awful.
Why was it awful, Jeff?
The first year was okay. I mean, the first year was kind of fun. I mean, we sold the company. We were doing quite well, and we kind of made a good turn. I mean, we were trending. Everything was looking great. And the second year into it, there were 11 other portfolio companies in this private equity group's fund. And we started to see some red flags that some of the other companies were struggling. And, I started to hear from some of the other CEOs that, they were taking all the money from their company and trying to fund these other companies, and it was ruining their company. And I was like, well, we're too small to, matter. Well, eventually they needed to start doing that to all the companies. And I would go in and try and pay our vendors, be operating, and somebody had drained our bank account without even telling me as the CEO, right?
So a private equity firm had acquired you?
Yeah, they acquired the company.
Oh, and this is in your transitional period of you exiting as a CEO.
Yes, exactly. So there's an earnout and the whole thing, and that's part of it.
Was it 40 million in revenue?
We did peak at 40 million in revenue with this company. And the sad thing is that you started to see that really decline over time. And a lot of, some of it had to do with the economy and
that must be so disheartening though. Like a private equity firm coming in and like on that whole experience, like what could you give a founder or a CEO kind of those flags to watch out for?
Yes, we learned a ton. So one thing is when you're getting ready to sell your company, don't take your foot off the gas pedal. Keep your eye on the future, and we did make that mistake at one point where we were going to sell the company about 4 or 5 years earlier, and we saw that it was actually when we hit 2008, 2009 banking crisis, and we were set to sell the company for quite a bit at the time, and so but then when that hit, capital markets totally dried up, and we had started to manage to EBITDA. Like we wanted to just make this as profitable as possible right now so we could get a good multiple on the EBITDA. We weren't thinking about future as much. It was, how do we make this profitable, like super profitable? And some of the decisions that were made there, just as a board, were influenced by the acquisition. If I had to do that over again, I would have treated the business like the acquisition wasn't going to happen, because it ultimately didn't. And I think you have to make sure you're running the business and not thinking sell.
Yeah.
It can ruin. Yeah, it can ruin
your mindset.
Yeah, it totally does.
Yeah.
And it led to some tough decisions where we ended up having to let some really good people go because we kind of made some mistakes.
Yeah. It's super interesting. And how is the company now? Like,
Well, that was one of the sad things is the private equity group. I actually got out a little earlier because, I was starting to get to the point where I would go in and try and make payments to our vendors, and I would get told from, the private equity group that, we'll put some cash back in so you can make the payment. It would never happen. They just said, go figure out how to do it. And so I was making promises to vendors that I was thinking I was going to be able to fulfill that ultimately we couldn't. And so I started to have to, do some things where it was like, okay, we're going to save this money. As soon as we get it, we're going to pay the vendors so that we're there, so that the cash doesn't sit in the bank too long and it disappears. And it was things like that for 2 years that it was miserable. And ultimately, this company, they took 11 companies through bankruptcy. And this was after I left, but 11 companies all went through bankruptcy.
Holy shit.
Yeah.
You got to be pretty bad at business.
Well, yeah. The private equity firm, I don't think they were hurting, because they were, they take cash out, and they were fine. But the employees that lost their jobs, the businesses that did really well, that all went under, that's the sad part.
This is really sad. And a lot of these listeners here at Deal Disruptor are looking to acquire a company and also exit.
Yep.
So I guess 3 main takeaways from that whole experience.
Oh, man. So one is, definitely be careful on who you sell to.
Yeah.
Most likely you're going to have an earn-out period, and you're going to be probably working with this group for a period of time. I would say, number one, make sure you're comfortable with that, and that you're, fully on board, and that, you've got things tied up. If you don't have to have an earn-out, I would say, see if you can get out as quick as possible.
Yeah.
That's how I would do it based on my experience.
Yeah.
Some of the others, kind of like I said, don't take your eye off the ball. Don't think that, it's going to happen. Treat it as if it happens, great. If it doesn't, that's okay too, because we're moving forward, and don't take your eye off the ball.
Yeah.
I don't know about a third.
Yeah, that makes sense. And have you ever acquired a company?
I have not acquired a company. Nope.
Is it something that you would ever want to do? Or are you happy kind of being in the angel seat?
Honestly, I think I'm at a point in my career and kind of lifestyle that I don't think I would acquire something to run it.
Yeah.
There are much better operators than me.
Yeah.
And I think one of the advantages you do have is of seeing a lot of companies. You do start to recognize some patterns in founders and operators. And, I think, being able to see some of those that are really good at operating, I would rather have them operate than have me operate at this stage.
Yeah, that makes complete sense. So a couple of weeks ago, we met around DFX, and you introduced us to some of your communities. I'm curious, what was your first initial kind of like reaction to DFX and everything we're doing in the capital raising space?
Okay, super cool platform. Something that I've always kind of gravitated to is connecting investors with potential deals and founders, right?
Yeah.
And so having the DFX platform is so cool. And so it was like, oh my gosh, that's why I got so excited when you guys took me through the demo. I was like, I can see so many applications for this, and I think it was excitement was the first reaction. It didn't seem foreign or anything. It seemed like, yeah, this makes sense.
Yeah. I think it's really cool to kind of see everything that you guys are doing, and us wanting to be able to facilitate a place where you can bring in the founders and the funders and the service providers, but you have a place outside of those events to actually get deals done. And I think, there's not many platforms out there that I know of where the economics are $10 a month to raise capital and nothing on the upside.
No kidding. Yeah. No kidding. So very cool. And I'm excited to dive in a little bit deeper.
Yeah, me too. Me too. And I would say, I would just love to know from you, what is kind of like, if someone's listening and they're looking to kind of embark on raising capital, I think there's so many different, we can look at the founders, but as far as the actual business model, like I'm sure you've seen thousands, if not hundreds of thousands of decks. Kind of like, without meeting the founders, what are some things that you look for these days in a business model?
Yeah, good question. Traction is key, and it should have always been key. I know that a lot of times founders will say, well, I need money to get traction. You don't need money to get traction. You can bootstrap your way at least to a certain point. Great example, and this flows through to the founder, because ultimately early stage, you're investing in the founder.
You are.
What the pitch that they give you is probably going to change. 6 months from now, their pitch could be completely different.
Yeah.
But the founder's the same. And so you're betting on the jockey, right?
Yeah.
So one of the things that you can kind of see through, whether it's a deck or talking to the founder, is, how they get that traction. Great example is an incredible founder that I got to know really well. And, he was in the process of building a software platform. Mm-hmm. And he went out and started selling it. So he was selling the software platform before he built it, and had like $120,000 of reoccurring revenue before he had a product built, right? Basically saying, hey, when this is ready, are you guys, will you sign this LOI and we'll get you all set up? As an investor, I'm thinking, okay, one, this founder can sell. He's got,
huge.
He's got LOIs. And so, no, he doesn't have any sales yet. So it's typically, you think of traction in revenue.
Yeah.
Well, there's other ways to get traction, whether it's customer acquisition, users before you kind of get to that revenue ramp, or LOIs and interest in your product. It's like, we've done this many customer surveys, or we've done, we've got this big of a waiting list, whatever it is. There are ways to get traction. And so those are the types of entrepreneurs I think investors really get excited about.
And I think that just shows their grit and their determination.
Yes.
And I love that you just said that, because I feel like that is such a tangible thing. You don't have to have the product. You don't have to have the development team. If you're wanting to actually go and see if there is a product market fit,
yes,
what is the best way than going in and getting an LOI? And even if 60% of them only sign up, you already have a waiting list, and that is invaluable.
Okay, another good friend of mine, he's doing kind of something similar. And I've had a lot of founders ask, it's like, well, how do we raise money if we're pre-revenue?
Yeah.
And we don't have any traction.
Yeah.
So good friend of mine has just started a new company. He had a very successful exit with a big company that he started. And this new company, you can tell he's a seasoned entrepreneur. He knows how to do this. He was walking me through a demo of their platform. He walked me through the whole Figma thing. It's like, this is how it works.
Yep.
And he said, and this is who we've talked to. We've talked to these clients. They're all on board. As soon as this is built, they're in.
Yep.
And so he's already building that whole traction piece before he builds anything. He's like, what we need the money for is to build this, this, and this. This is what it all already looks like. We've got it scoped out. This is how much it's going to cost. It's like, it is all pinned down to where, are there going to be pivots or whatever? But he's already out there selling it before it's even, built.
And Figma is such an amazing tool because you really can get that full experience.
Yeah.
And honestly, shout out, it made me think while you were saying this, shout out to Jesse, because he built the entire DFX platform, and, within 4 months, our MRR was 2 times our cost of running. So
amazing.
We definitely used your philosophy in that sense. And I'm grateful that I have someone who can bring that development in-house at the start.
Oh, huge advantage. Yeah.
And we can move so quickly. Someone will say something to us and it'll be live that afternoon. And because we're getting that feedback and we're moving so quickly from a product road standmark, by the time we have our development team, it's going to be so much easier and more efficient.
Yes. Yep. And you bring up another good point, that having a technical co-founder, crucial. So crucial.
Yeah.
So, and I think a lot of founders kind of see that. I mean, you can outsource, your CTO or some of your dev to some point, but at some level, there's a huge advantage to having a technical co-founder.
Huge advantage. And also, just from my perspective, because I'm kind of more on that partnership and marketing, we can really collaborate, and I'll just throw out these crazy ideas, but he can be like, no, that's actually possible. And so when he's like, it's actually possible, like I get so excited. And then all of a sudden, 24 hours, he's showing me. And it's really cool because we get to move at such a rapid rate. Whereas if we had a development team, I know we would be pulling our hair out.
You're scoping things out. It takes forever. And it
the burn rate.
Expensive. Yeah, you start to think of things in terms of dollars, and it's like, oh, we do need to raise, right?
Yeah. So I'm really grateful to have found like two incredible co-founders. Our third one's actually based here in Salt Lake City.
That's what Jesse was saying.
Yeah, so you'll get to meet him tonight.
Oh my gosh. Okay, awesome.
Thank you so much, Jeff.
All right. Well, sounds good. This was awesome. And this is so fun to
I
chat with
appreciate you jumping on the podcast.
Absolutely.
Yeah.